It's already been several months that we have seen the saga play out on Greece. Well, for more on this, let's get to Mike O'Rourke. He's the chief market strategist at BTIG, joining us from Philadelphia, where Brian Roberts was actually just moments ago, Mike. And, you know, you have been on this program before saying that these Greek problems shouldn't rattle U.S. investors. But, hey, look at what happened yesterday. Do you still feel this way or what?
Betty, I generally do. We're looking, you know, in the world of global markets where money's looking for safe havens, they're looking for returns. You know, the U.S. is offering the best combination of both. The way you look at it is people have been looking to Asia for, you know, high growth, you know, aggressive returns. They've been looking to the U.S. and Europe for more stability. And now as Asia looks to slow, you know, they look to slow the economies there, especially China. And Europe has these problems. It makes the U.S. a much more attractive destination for investors, especially after 3 years of domestic equity fund outflows where people have not wanted to buy into U.S. stocks.
And yet, though, Mike, you had a, you know, over 200-point drop in the Dow.
And that's fair. We've had a 17% rally since the February lows, which, you know, basically occurred the first time this situation with Greece blew up earlier in the year. So we've had a big rally. Obviously, the markets don't go up in a straight line. We need to consolidate our gains, and we need to push forward. But right now, you know, I guess what I'm saying is the problems in Greece are real, and they're real to the European Union, and they are a threat to the currency. But in the same respect, it shouldn't derail the U.S. recovery. The response in our economy, the growth in our earnings that's driving stocks here, which should outweigh what's going on in Europe.
But you see, the thing is, Mike, though, if you are, and as you're saying, you know, if there is going to be more confidence in the U.S. economy vis-a-vis Europe and vis-a-vis Asia, then you would see buyers going into various assets in the U.S. But Treasury yields, they're actually coming, well, they're near that 4% yield still on the 10-year. So what does that tell you?
Well, actually, but they have dropped about 30 basis points from that level as this crisis is, you know, reemerged, and that's a flight to quality. It's you know, basically what you're seeing is investors around the world sell currencies and assets around the world in favor of converting them to dollars, which the dollars, obviously, the dollar index is breaking out. It's, you know, the euro is making new lows versus the dollar, and then they're buying treasuries or U.S. stocks with it. It's a little different than what occurred in 2009, where investors only went to treasuries. This time they're going to go to stocks as well.
Okay. All right, Mike, good to talk with you as always, and appreciate your always insight into the markets. Mike O'Rourke, the chief market strategist at BTIG.